Well, good morning, Jaginder Rana here. Bet on growth plus stability. Bet on growth plus stability. Manufacturing push and fraud development and fiscal consolidation marked finance minister's strategic blueprint to sustain high growth. For capital markets participants, budget offered opportunities and incentives that reflect government's intent to balance growth with stability. NRIs can now invest in listed Indian equities through portfolio investment schemes. This broadens foreign capital base by attracting individual investors. Budget raised STT on derivatives on future. STT is up from 0.02% to 0.05%, while options premium and exercise were both set at 0.15%, up from 0.1% and 0.125%. Although transaction cost will rise, impact on market liquidity is expected to be minimal. When STT was increased in October 2024, trading volumes declined only briefly. This adjustment is a targeted revenue measure for supporting fiscal consolidation and funding public infra and social development. Buyback considerations reclassified as capital gains has restored its effectiveness as a capital return tool. A differential tax rate for promoters set at 22 to 30% provides ease and clarity. This makes buybacks a more competitive option for shareholder returns. Extending duty deferred period for trusted importers, transforming customs warehousing and simplifying advance rulings reduces operational friction. A stable, predictable regulatory environment is as important as fiscal policy for foreign investors. Market confidence is anchored in a credible fiscal roadmap. Gross fiscal deficit for financial year 27 is targeted at 4.3%, down from financial year 26, so 4.4%. With removal of compensation cess, this results in a neutral fiscal impulse for financial year 27, ending fiscal drag and supporting growth. Finance Minister reaffirmed the goal to reduce centre's debt to GDP ratio to around 50% plus minus 1% by financial year 31 from an estimated 56.1% in financial year 26. Fiscal projections are robust. Gross tax revenue is expected to grow 8% on year in financial year 27, up from 7.4% in financial year 26. Excluding cess, growth is 10.4%. Total expenditure is projected to rise 7.7%. Central capex, including IEVR, is set to increase by about 11.5% year on year, recovering from less than 4% growth in financial year 26. Defense capex is projected to grow by about 17% in financial year 27, benefiting defense manufacturing companies. Notably, budget's gross dated borrowing estimate is higher than initial market expectations. Our actual borrowing could moderate if collections from other functions sources exceeds projections. If borrowing stays elevated, 10-year G-SEC yields could see a marginal increase. Long-term growth is supported through targeted sectoral initiatives. Budget seeks to make India a global data center hub, offering a tax holiday until 2047 for foreign companies providing cloud servicing through India-based data centers. This addresses investment outflows to countries like Malaysia that benefited from similar policies. So for companies such as Google and Meta, it offers 2 decades of fiscal certainty to build infra in India, leveraging its scale and renewable energy resources. The resulting boost to construction power and hardware sectors will be significant. But it also simplifies regulations for IT sectors by strengthening safe harbor provisionings. It sets a common 15.5% margin for IT services and raises the eligibility threshold. Companies can opt for a 5-year continuation with approval via an automated process. For global firms with the cost plus subsidies in India, meeting this benchmark protects them from transfer pricing audits and litigation, offering long sought regulatory predictability. So these measures have significant combined impact. Data centers incentives attracts a new asset incentive, digital infra FDI, while safe harbor reform secures and encourages global capability centers ecosystem together. They position India to transition from back office up to a global node for digital services and infra. This could drive a transformation similar to telecom reforms that enabled the Bangladerization of IT services. So focus on physical infra, including new freight corridor, waterways, and individual corridors, will have a multiplier effect. The dedicated rupees 10,000 crore SMEs growth fund and related measures aims to create champion MSMEs and strengthen the domestic entrepreneurial ecosystem. Thank you. Thank you very much.